Hello and welcome to another episode of the Investor Financing Podcast. And we have another great guest today. We're going to talk about multifamily, finding deals in different markets, how to identify markets, how to take the plunge into real estate. Please welcome Axel Ragnarsson. Axel is an active real estate investor and is based in Boston. He purchased his first multifamily property during his sophomore year in college, leading to the founding of his real estate investment firm, which is called Aligned Real Estate Partners. Currently, Aligned Real Estate Partners owns approximately $17 million in multifamily real estate and has been a principal in over $27 million in transaction. Axel is also the host of the Multifamily Wealth Podcast. Welcome to the show. Thanks for joining us. Appreciate your time.
Absolutely, Beau. Thanks for having me.
So you got a pretty interesting story. I was reading your bio, and so in college, you're like, you knew there was a better way. You're like, the school thing is great and all, but I want to invest in real estate. And so how are you like coming up with the capital to like make your first investment? And what was your first investment?
Yeah. So before I got into real estate, I was buying and selling anything I could get my hands on. I was pretty much doing whatever I could to make a buck. And I was always on Craigslist, finding good deals on Xboxes or airsoft guns, golf clubs, whatever, buy something for $200, sell it for $400. And I did that for really beginning of high school, all the way to the beginning of college. And then I started buying and selling cars. And that was really where I started to make, not good money by any really metric, but good money at the time for sure, being in, 19, 20 years old. And at that point, I knew that I wanted to get into something else. And I started learning about real estate just through, looking up other ways to make money online and trying to figure out what the next step was that I could take to buy and sell something that was larger. So I found real estate and quickly realized that I didn't have enough money to go and buy a property in the traditional manner of putting 20 or 25% down. And even if I did have that money, there's no way that I would have qualified for financing, being a 21-year-old kid with no W-2 and, no real credit. So I knew that I had to get a little bit creative. And I ended up finding a private lender through my network. And I was going to, a million networking meetings, what felt like I was doing a bunch of virtual ones. I was probably going to one a week in person, going to business networking meetings, not even like real estate specific ones. And through a group that I was in, that I was actually interning at through a college program, I actually met a guy that did some private money lending, basically said, if I bring you a deal that looks like this and has these, numbers, these attributes, is this something that you'd lend me money on? And he was like, yeah, if you find a great deal that looks like that, and, you're able to bring some of the money to the table, I'll go ahead and, extend you a loan. So went out there, found a 3-unit deal on Craigslist. It was a for sale by owner from a guy that was just looking to get out of the business. Hated paying real estate brokers, one of those guys, and took it down at a pretty good price. And the deal was very straightforward. It was just, below market rents, good purchase price, didn't require a lot of money for renovations. And I put down pretty much every dime I had at that time. And with the, that's not advice, shouldn't do that, but that's what I did at the time to get into that deal, knowing that if something came up, I'd just figure out a way to get it done. And that was the first deal, was a small multifamily property up in New Hampshire that I financed with private money.
That's awesome. And so before we went live, I was kind of asking you about your background, and really you never really had a job. You had a job for like 4 days, maybe longer, previous stuff, but what I gathered from you is you're very resourceful, because you were flipping things, you're flipping cars. So you're kind of a person that takes massive action and just does it. And that's great, because that's what you really need in real estate. It's as a top skill. So I think part of your story then is then as you're trying to invest more, you were struggling a little bit, right? And then you said, oh, I need to go get a job now. And then you got a job, and I was reading it in your bio, and then it was like 4 days in, and you had a deal fall in your lap that was like a home run deal, right? And you weren't able to jump on it because you were working, and then like the next day you quit your job, right?
Yep. No, that's literally what happened. And pretty much what happened after this first deal, let's fast forward a couple of years. I graduate college. I live in New Hampshire for a year after I graduate, and then I moved down to Boston. And I moved down to Boston to take a job. And the motivation for getting a job at the time was was having a hard time continually getting lending, and it was making the process of going out there and buying properties more challenging because I wasn't very financeable. And at the time, I think I had like 16, 17, 18 units, something like that. I had maybe 3, 4 smaller buildings. And, so my rent was getting paid, I guess, right? I was making a little bit of cash flow, but not enough to like live off of and like really do it full time. So I was kind of in this weird middle zone where I was like, I really want to do this full time, but I can't really do it full time because I'm not making enough money. I got to do like a few more deals. And to do those deals, I'm actually running into challenges because I'm not very financeable. So I went and got a job down in Boston. It was a sales job, pretty demanding hours. It was a great job at the time. I was happy to get it, but my third day there, I was in the middle of training and I got a call from a seller who received one of my direct mail pieces. And I was, still marketing for deals at the time. It was a 12-unit deal. So it would have been the largest deal that I'd ever done at that point. And in his voicemail, he basically left me what he wanted to get for the property. And it was like a comically good deal. And by the time I got home, listened to his voicemail, called him back at like 7 p.m, he had already accepted another offer from a guy that sent him a direct mail piece, somebody I was competing with at the same price. And it did close. The deal went through. And I still look back at that. It was, he wanted like 50 grand a door. The market price was like 100 grand a door. Like it was comically cheap, half of market value. And, so I was so mad that he took the offer that I just went into the office the next day and I was like, I'm never letting that happen ever again. And I basically just, I told my boss, I was like, hey man, this is what just happened. Like that deal would have been my salary here for a year. Like I just can't really work here. And I don't want to, half-ass it and just not bring it every day and all this. And he was like, yeah, man, makes total sense. And from there, I was down in Boston with a lease. So I was like, I really had to figure it out because now I was away from the market I was investing and cost of living was higher. And I just really got after it. I doubled down on going direct to seller and, made some pivots in the business and figured it out. But yeah, I mean, I'm glad it happened 3 days in and not 3 months in where it probably would have been a little bit harder to leave. But it was one of those eye-opening situations where you're like, all right, well, I'm leaving so much on the table by not focusing on this full time. I just can't afford to do that.
That's an awesome story. And will you tell us like how, okay, now you're doubling down. You're like, you have to do it at this point. You have to succeed. And when do you realize about the power of like syndication and raising capital, like how that could exponentially grow your business?
Mm-hmm. So from that point, that was 2018, I believe, late 2018, early 2019, somewhere around then. So we're talking like, 3-4 years ago. And at that time, I was still doing deals with my own money. And for the next couple of years after I quit my job, really doubled down, went full time. I bought maybe 60, 70 doors, just using creative financing, going direct to seller, rolling proceeds into the next deal, not really taking money out of the business. But I got to the point to where I had a nice, I guess a nice portfolio, something that was paying me to live and all of that. And I was like, do I want to just keep buying like 4, 6, 8 unit buildings forever? Like that's not very fulfilling from like a career perspective or like fulfilling my potential perspective. So, I was introduced to folks that were doing larger deals, larger multifamily deals. They were raising money from investors to do it. And as I was growing my own portfolio, I had a lot of folks, basically seeing that I was having some success and were asking me how they could get involved. And I said, I got some folks that might want to invest alongside me and would want to participate in what I'm doing. Maybe I should think about raising some money, maybe doing some larger deals or getting serious about that side of the business. So this is a couple of years ago now. I mean, pretty much right around when COVID hit, I said, hey, I'm going to start, really looking for larger deals. And larger at the time for me was just 25 plus unit deals. And I'm going to do it both locally and I'm going to do it out of state and look in some other markets as well. So I can increase my odds of actually finding a deal. So we were marketing in New Hampshire looking for deals, and we were marketing down in Florida and Central Florida. Picked Florida because, great market. Everybody was moving there. I picked a city down there to actually start looking for deals called Lakeland because it was right between Tampa and Orlando. And it was a very similar market in size to what I was investing in New Hampshire. And it was a bit more of a tertiary market. So I know I knew I could compete relative to trying to find deals in like a Tampa and Orlando where I'm probably not going to find a deal. So kind of went really all in on those two markets and picked up some traction towards the end of 2020 and started doing some deals. We did a 28 unit and a 16 unit down in Lakeland. where I partnered with a couple of local guys down there that I met through networking events. And, we raised a little bit of money to do that. I was still a significant investor and owner in those deals. But that really opened the eyes and started to get the ball rolling, because I was like, all right, we got proof of concept now. These deals are performing really well. Our investors are really happy. I have other investors that want to participate. And that led to doing some larger deals, out in Texas, and actually participating in more syndications. And now that's really what the business is. It's, we're raising capital from investors and we're going out there and buying deals. And it was really the mindset shift of to, really directly, I guess, answer your question. I was afraid to work with investors because I just didn't want to answer to anyone. I wanted to control everything, all this. But I realized that if I wanted to grow, I just had to do that. And I figured, let me go and work with folks. And if I don't like it, I'll stop working with investors. I'll go back to doing my own deals. And it turns out that I really enjoy it. And it has allowed our business to grow and scale. And, it is somewhat essential. If you want to level up, do bigger deals, bigger dollar amounts, and more deals, you got to work with partners and investors. And that's where we're at now.
Yeah. So I like the concept of how you looked at Lakeland, Florida, and it was like tertiary market, but it was like where the two biggest markets in Florida are growing, right? You have Tampa, you have Orlando. These markets are huge, and so many people are moving to Florida. So that was like you bought it like a really good time, right? Because that was like before now it seems like it's Florida. But in today's day and age, like, are you kind of implementing the same strategy of looking for tertiary markets the same way? I mean, how are you, because you own property in Indiana and in Florida and New Hampshire and, Houston, Texas, but it sounds like what you're doing now is you have a big network of investor co-GPs sometimes, right? So somebody might bring a deal that they have tied up or have an LOI on, and you're interested in that deal, and then you might partner with them, or vice versa. Is that kind of what's helping you expand into multiple markets? Because it's really much easier to have boots on the ground, it seems like, especially if it's not a huge building. Is that kind of the mindset?
Absolutely. So there's really two elements to what we do. One is we go direct to seller, we market, we're looking for our own deals, we network with brokers in our true target markets. I mean, we're doing deals in all of these markets, but in terms of the markets where we're really actively trying to be the deal finders in the equation, it's really three, Indianapolis, Central Florida, and then up in New Hampshire. And, we spend $4, $5, $6 grand a month on marketing. Like, we're really trying to find deals, which some people listening to this podcast might be like, that's not that much. But for us, that's our method of keeping our pipeline full. And we bring investors into those opportunities with us. And those are deals that we run, we raise the capital for, we're the deal finders, the whole 9 yards. But we also have this element to our business where if somebody in our network, and we network our butts off, and I know a lot of great operators that are local to different markets throughout the country that are great markets that I'd love to buy in, that I know our investors would love to be in. For example, like a Houston, and we have a deal out in Phoenix that we've helped raise capital for as well. Basically what we do, like you mentioned, is we co-GP those, or we'll raise capital for those deals. So for example, we did a deal in Houston. We had a great operator that found that deal through a great broker relationship. He brought it to us because, he could raise some of the capital, but he needed some help kind of raising that last 25% of the equity. We helped him raise the money. We're involved in that deal. We stay very, very tight with him, in touch with him in terms of the operations and how it's going. And that's how we participate in that deal. And that's how we can bring a great deal like that to our investors, is work with somebody that has great local relationships with the brokers, that has great local experience, both operating deals and in terms of their network. And that allows us to get into some of those other markets. So, the short answer is we'll partner with other operators and bring them what they need. Sometimes it's operational help. Sometimes it's signing on debt, whatever that is. We'll work with folks in that capacity. And then we're also busting our butts to go be the deal finders, to go find our own deals that we're going to operate internally. But we like to do both because it allows us to get into more deals and more markets and bring more opportunities to our investors.
And what has been your experience raising as you've been growing? Because it sounded early on you understood you needed other people's money, the first private lender that lent you the money on the triplex. But fast forward to where you're at now, where you have to raise several $1 million. I mean, obviously you're looking for people that want to invest in real estate, but are just busy professionals that make above average salaries. I mean, what's your strategy to build this network?
Yeah, it's a good question. I mean, I think it's the hardest thing to do in real estate. People like to say that finding the deals is the hard part. Finding deals is challenging, but I think what's harder is to build a true deep network of active investors that want to participate in your deals. I think that's harder than finding deals personally. So that's been something that the last year I've been spending a lot of time building out and trying to figure out. And, for me, I realized I had to consistently tell my story and stay top of mind with everyone in my network. That's reason for starting the podcast. I'm very active on LinkedIn and Instagram. I just started sending email to our email list, really valuable emails, newsletters, talking about the market, what we're doing, where I think the market's going in some of our target markets in the cities that we invest in. And it's a function of, you need to be having a lot of conversations. You need to be kind of omnipresent in your investors' minds or in front of folks that are interested in investing. And for me, that's being active on social media, getting in people's ears to the podcast, sending out those emails. And then, just most importantly, it's just being a great partner to invest with. So you have to buy good deals and you have to deliver on your projections. You have to over deliver on your projections. You have to communicate consistently. You have to be somebody that's easy to work with in that respect. And those are all things that we're focusing on right now. So, it's one thing to attract the investors to your network. That's a challenge, and it takes a lot of work and it takes time. But obviously, number two is you need to do a really good job. You have to provide a really great service to your investors, which is great returns and a great investing experience with this, which is consistent communication and good communication in terms of the updates that you're providing folks. So I've focused on a lot of those different things. And what happens is, over time, you start to gain momentum. And as you do some deals and people invest in your deals and you do right by them, they'll refer you to people in their network. And that's a lot of what's happened now is, an investor who's in one of our deals where, we've refinanced, delivered all their capital back. They still own, a portion of that deal. They're extremely happy with how it's going. Now they're going to go tell their buddy to give us a call and to learn more about our business and potentially participate in one of our deals in the future. So it's very, very much a snowball effect to where, it's really hard to build that snowball, to get it growing, but once you have good deal flow, once you're delivering for your investors, once you have some infrastructure, that snowball really starts to grow when it starts to get, going down the hills. So there's a few different things, I guess, right? I probably threw a number of things at you right there, but I would say that, you need to be mindful of all of those different components in order to actually stand out from what everybody else is doing.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. Other than multifamily, is there any other food groups that you invest in, or do you have any other assets you're really investing, or is it mostly like you're just all in on multifamily?
So I'm all multifamily, and the reason for that is I want to stick to what I really know. I've done a lot of multifamily deals. I've, just trained myself on how to be a good multifamily investor and operator. And honestly, I think it would be disingenuous for me to go out there and find like a self-storage deal and go bring it to my investors and say, hey, I got this great self-storage opportunity. Like, if I was an investor, I'd be like, really? You just went from doing multifamily, and, even if I had spent a lot of time learning the business, I don't necessarily think I'd want to participate in somebody's first deal, if they were to switch from one asset class to another. And for me, I like multifamily. I think that multifamily has the strongest prospects into the future. Just as an asset class, it's a human need, not a want, like a lot of the other asset classes we're talking about. You can make an argument for mobile home park in that, or mobile home parks in that as an asset class, but I'm most bullish on that asset class. And it's something that I fundamentally understand and know and can speak confidently about when speaking with investors. it's also a lot of work to learn something new and become an expert in it. Right. So I haven't necessarily had a desire to do that. And I think really the only way that I would participate in something else is if I was partnered with, a rock star investor in that space.
Good answer. That's a really good answer. I tend to agree with you on that. And how do you, I know you're just focused on your core markets now, but are you like constantly looking at other markets, or how do you go about kind of like doing market research and seeing if there's any other opportunities that where maybe not every investor might be looking? Like, I know Indy is like in a competitive market. I don't know if you know my buddy Derek Clifford.
I do. Yeah. Me and Derek spoke last week, actually. Yeah.
Yeah. So he's an Indy guy he's from California. But he's been buying in Indy. I know he loves that market. But a lot of these markets are really competitive. How do you go about kind of identifying some areas that might not be as looked at that might have potential?
Yeah, it's a good question. I mean, it's really hard to do that, right? I mean, it's just hard to compete in one market nowadays, let alone multiple markets, right? So for our business, if we are going to be looking for the deals, and that's going to be our role in the process, deals, operations, and maybe we're raising all of the capital or some of it, and we bring a partner in to help us out or what have you. We only want to be focused on a few specific ones, which is why we're really only looking in these three right now. And it's because we've done deals there. And a lot of it is because, Indianapolis is a competitive market, but it's not in the top 15 most competitive markets, top 25 most competitive markets, right? One of the reasons that we're looking in Central Florida where we are, and we would love to do a deal in Tampa, for example. I'd love to buy something in Tampa, but I'm not going to be naive enough to go think that I'm going to go compete with guys who have been buying in Tampa for the last 7 years, that have an established presence, that have the broker relationships. Like, I want to spend my time wisely, and trying to compete with those folks is just going to be brain damage, right? So for me, I'm going to go 30, 40 minutes outside of Tampa. And that's where I'm really going to go hard on my direct to seller marketing and building relationships with folks in that market, because I know that I have a chance of actually competing there. Same thing with Indy, right? In all these markets obviously have all the fundamentals, right? The job growth, the population growth, the rent growth, those are all the things that we want to see in order to participate somewhere. So I should say we check all those boxes and then we go into where we can compete. But, again, that's the same thing with Indianapolis. It's a competitive market. We're competing with both national folks and local folks, but I still think that there's a little bit more room there to actually stand out, compete, to leverage, local connections, national connections than, Houston, San Antonio, Dallas, Fort Worth, Tampa, Orlando, Charlotte, North Carolina, Raleigh, North Carolina, all of these huge East Coast markets, all the big Southwest or Southeast and Southwest ones. So if we're going to go into a market that isn't those, where we have like a Houston or a, Phoenix, Arizona, where we've participated in some deals, it's going to be where we partner with the guy that I can't compete with on the deal finding side. I'm going to partner with the guy that's in Houston or in Phoenix that owns 1,000 units, and their need is something that I can provide, which is, we could use some help rounding out the capital stack, or we could use some help in some other respect, whatever it could be. But I'm not going to pretend like I'm going to go be better at finding deals than the guy that's been building broker relationships there for over 5 years or 10 years or 15.
So most of the deals you find are kind of like it's let's call it a pocket listing. It's nobody knows about the deal except the listing broker, and he's bringing it to you, versus how many deals are you finding in today's market, pulling data from like Reonomy or another service where you're dialing for dollars or doing postcards or something? It sounds like you have a marketing budget of a couple grand a month. Is that have you been having success lately? I know early on in your career, you were doing a lot of direct. I know it's different when you get into these bigger assets, but is that going to continue to be kind of the because a lot of people don't off-market prospect. That's why I'm wondering. That's kind of unique that you're still doing that, which I think is good. But how can you refine that business and like, are you using like a Reonomy type of thing to get lists and are you actually picking up the phone, or are you just doing direct mail?
Yeah. So, I mean, we do a number of different things. And I think the answer to this question for those listening, trying to wonder if they should start direct to seller market or they should start direct to seller marketing or cold calling or something like that, is it's all based on your criteria, right? If you're only looking at 100 plus unit deals, don't go direct to seller. You're going to waste your time and waste your money. No 100 plus unit deals are selling because some guy got a postcard. I'm sure someone's going to be listening to this and say, oh yeah, I bought, okay, maybe you did, but you're the 0.5%. Like that's not how those deals are trading. Those deals trade through brokers. So for us, we market to 20 to 80 unit deals, and you can still get in front of a seller, a mom and pop seller, somebody who truly doesn't understand what they have or understand how to run their property correctly, and put that under contract at a great price. Last year we did a 40 unit portfolio in New Hampshire that was direct to seller. Did a 16 unit direct to seller. I personally bought on my own portfolio where there's no investors involved, probably 30 units direct to seller. We're working right now. We're in negotiations with somebody that has a 76 unit portfolio, older gentleman looking to sell the whole thing. Maybe we can put together something direct to seller. Those deals are the ones where you got true meat on the bone. I mean, like the variance in the pricing you get going direct to seller versus anything that's brokered, even if it's a brokered off-market deal where the broker is truly calling you first, the broker is still not going to give you the same price you'd get going direct to seller. Like that's going to allow you to make that first offer, maybe get it under contract before other people get eyes on it. But pricing wise, it's probably still going to be somewhat closer to market. So, for what for our criteria, which is that 20 to 80 unit range in all of these markets that we buy in, going direct to seller is profitable and does make sense. And fundamentally speaking, one deal pays for a year's worth of marketing and more, so when you look at it through that lens, you can spend 60 grand a year on marketing. If you get one 30 unit deal, you're going to get more than a $60,000 margin on that deal. So that's how I rationalize it. And it also just allows us to stay a little bit more plugged into all these markets that we're marketing in, because we're connecting with sellers that maybe aren't looking to sell, but at least we're building relationships with more investors, more people that are active in these markets, in the markets that we're targeting. But outside of that, I think if you're somebody who's only looking at 100 plus unit deals, and I'd love to only do 100 plus unit deals, they're easier to do. You get some scale there. Granted, the challenge is those are brokered deals, and you have to really, really, really compete with a lot of other buyers. You have to be a really great partner for that broker, and you have to invest over, not months, but years in those relationships to get those deals. And we're doing that. It's not like I'm completely neglecting that. We're doing that right now, but I'm just seeing more opportunity going direct to seller, and it's not easy. It takes a lot of time. It's a whole segment of the business that requires focus. And, we have a full-time acquisitions guy now that takes some of that off my plate. So it's not like it's, there's a cost to it, right? And there's both a financial cost and a time investment cost. There could be an opportunity cost in spending that time elsewhere. But I think if you're consistent with it and you're going after the right properties, it's a very lucrative way to find deals and to participate in the business.
Yeah, that's what, I don't buy right now large multifamily, but my thought process is I'm going to pull data from landlords that own a decent sized portfolio in a market that are probably getting ready to retire. And I'm going to try to do seller finance deals or just negotiate really good pricing on it and go right direct to seller. There's so many people retiring right now. And I heard you talk about that guy with the 76 unit portfolio. I think those are, I'm friendly with this lady from Virginia, and she got started in real estate investing in her 20s. And she picked up 84 doors in 4 years. And these are all single family homes by buying portfolios from burnout landlords or retiring landlords. And I'm like, that's just bread and butter right there. But most people won't put the work in or right. They're not going to set up the systems to go off direct to seller. And I think, hey, if you're willing to set up the infrastructure, because you can outsource all that to us, you got to learn how to do it first yourself, but you can get an acquisitions manager, you can get virtual assistants and everything. So I think it's really good feedback. And at the end of the day, you're spending 60 grand on marketing every year. What's the ROI on that? One deal is going to pay for it. So it's great.
Mm-hmm. And you're going to get more than one deal if you're spending 60K on marketing, unless you're completely botching unless you're just not picking up the phones. I mean, there's a way to waste money, but if you're picking up the phones and you're putting folks in a CRM and you're doing some basic follow-up, you're going to get deals. But again, like you said, like we've both been talking about, it's a function of what you're pursuing. If you're pursuing large 100+ unit deals, it's not going to be worth your time. That's just, my own opinion. I feel like some folks would say, no, it is worth your time. But I would say that the point of direct to seller is to get in front of mom and pop owners. And that's the way you do it, is by trying to get in front of them, whether it's cold calling, direct mail, any of these different strategies. There's just not a lot of mom and pop owners that own 100+ unit deals. They're just, it's smaller numbers. So it's probably going to be a waste of your time.
That's true. Well, you gave us a lot of great tips, and I enjoyed hearing your story today. If people want to follow you, I know you have a podcast called the Multifamily Wealth Podcast. Is there a website or any other place you'd like to send people that want to learn more about where you're investing and what you're up to?
Sure. So I'm really active on Instagram at Multifamily Wealth. The Multifamily Wealth Podcast. If you search it, you'll find it. And if you want to, get on our email list, take a look at deals that we're bringing out, you can head to alignedrep.com, fill out a contact form there. And we got a few of them, and you can find yourself on our list, and that's where you can find my contact information as well.
All right. Awesome. Well, thank you so much, Axel. It was a really good interview. I hope everybody else out there got as much value as I did out of this conversation, and we'll see you on the next episode.
Awesome. Thanks, Beau.